Let's get a check of the day's top business news stories. Our business editor, Kate Moody's here. Hello, Kate.
Hi, Tom.
Another day, another central bank seems to be trying to control inflation.
Yeah, this problem that we're seeing repeated around the world. On Wednesday, the Federal Reserve announced its third consecutive rate hike of 75 basis points in the United States. It was followed today by Norway, Switzerland, and the Bank of England. The UK's central bank raising rates for the seventh time in a row by a more moderate than expected half percentage point. That brings borrowing costs to 2.25%, the highest in the UK since 2008. Higher interest rates tend to encourage consumers to save rather than spend, which can help to curb inflation. Now, inflation in the UK dipped slightly from its 40-year highs to 9.9% in August. That's still well above the bank's 2% target, and prices are expected to continue rising. The bank now expects inflation to peak at 11% in October, scaling back slightly from its previous 13% prediction. The bank also downgraded its forecast for economic growth, saying it believes the UK economy is already in recession. Well, central banks outside of Europe were meeting as well this Thursday. In Turkey, the central bank cut its interest rate from 13 to 12%. Recep Tayyip Erdogan has repeatedly flouted traditional economic wisdom in pushing for low interest rates, despite inflation which topped 80% in August. The Turkish lira has lost more than 27% of its value this year alone. The Bank of Japan kept its key interest rate at negative 0.1%, making it as cheap as possible to borrow money. That ultra-loose monetary policy has, though, driven down the value of the yen. And on Thursday, the government confirmed it had intervened in markets to shore up the currency. And inflation in Sri Lanka surged to more than 70% in August as its economic and financial crises deepen. Official data show food prices rose nearly 85% compared to a year ago. The country has been unable to afford key imports, including fuel, fertilizer, and medicine. The French President Emmanuel Macron has inaugurated the country's first offshore wind farm on the Atlantic coast near the town of Saint-Nazaire. The 80 windmills should be able to provide the region with some 20% of its electricity. It'll be officially plugged into the grid at the end of this year. Camille Nedlek has more.
In a visit to France's first offshore wind farm, President Emmanuel Macron promised legislation to speed up his country's transition to renewable energy. Currently, a project like this one can take up to 12 years to become operational. Solar farms take 6 years.
3 ans pour un projet photovoltaïque, c'est un bon objectif.
3 years for a photovoltaic project is a good objective. For small projects, we must do it even faster. And so for that, a new law is in preparation. But what's also key is reducing red tape. I want us to go twice as fast, at least for renewable projects. At least twice as fast, and it's possible.
Et c'est possible.
In 2020, the EU produced just over 22% of its electricity from renewable sources, but France lagged behind that average at just 19%. About 2/3 of France's electricity comes from nuclear power, with wind and solar only generating 7.6% and 2.5% respectively. Macron wants to see 50 more wind farms like this one by 2050, and for solar to generate a quarter of France's electricity. He has also pledged to cut red tape for nuclear projects. In the short term, none of these measures will alleviate the pressure on households this winter. France is much less reliant on natural gas imports than other countries in Europe, such as Germany, but is seeking complete energy independence amid a global energy crunch.
That's all for now, Tom.
Thank you very much indeed. Kate Moody, our business editor. Thank you so much.